about that. So the disclaimer is education purposes only. I'm a doctor, not a broker. I am independent, and I pay for all the tools I demonstrate. And trading involves risk, and you alone are solely responsible for any investment decisions you make. Whenever I do education, I talk with people. I like to be very clear that I'm not the inventor. I'm the student, and then eventually the student becomes the speaker to help other people and becomes the teacher. I rely upon what I've learned from a lot of smart people. Yeah, I've been involved in some indicator development, and I do some things my own way. But I always like to call out sort of where I got to where I'm at today and what my influences are. And to me, a lot started with two guys that are probably older than most of us on this call, William O'Neill and Ian Woodward. And I guess to start with Bill O'Neill, you all know O'Neill. He's the editor of IBD, owner of IBDinvestors.com. He wrote How to Make Money in Stocks and developed CanSlim. And Ian spent a lot of time listening to O'Neill on the radio. And Ian, I always used to say, took CanSlim and put steroids into it and made it better. And Ian and Ron, working with George Roberts and HGSI, the software tool, really created a application that allows us to do applied CanSlim and so much more. And it's not even CanSlim in my mind anymore. It's a relative. Now, Ian was steroids plus O'Neill. Gil Morales and Chris Katcher were amphetamines plus O'Neill. And these are the trade-like O'Neill disciples, and they taught us viable gap-ups, pocket pivots. And all these are huge influences in what I do. This is Gil and Chris's new book. It's coming out in April. Hopefully the market will run back up again just in time so we could read how to short and make money on the short side. Alexander Elder, and this is his partner Terry Lavorne, are some folks that I've had the opportunity not only to read the books but go to some live sessions. John Person over here, I'm hoping that John will come to our meeting again. He came to my last meeting and spoke. I've learned a lot from John, and John does a lot of things that we do at different names. He's a top-down guy, and I'll mention some of his things that I use tonight. Van Tharp, position size and money management. I think every educational program I've been to, including the ones I put on, probably don't do a good enough job of money management, and this is a Bible of money management. You might wonder why I would have point and figure charting on my wall here. It's not necessarily about the point and figure itself. It's about how they use comparative relative strength, looking at currencies versus stocks versus different futures. It's within the stock market, which sectors have best relative strength at a given time, and within a sector industry, where's the best relative strength among the individual stocks. And so it's top-down investing. It's just a different way of doing it, and I found it to be a great supplement. And then the lower left-hand corner is my buddy from Canada who'll speak in about 20 minutes or so and give us some of his thoughts about the upcoming market and maybe some upcoming potential seasonal plays. I have a lot of programs. I really rely on HGSI for my analysis, EdgeRater, and then I use seasonality programs. I have my favorite websites. And I never really talk much about Genesis on these programs because I don't want to confuse people. But I rely mostly on Genesis during the day, and then I make my trades in TradeStation and Thinkorswim. I try and be able to do similar things in all three, but there's a couple things I could do in Genesis that I can't reproduce. You've all seen this pattern before, and it's important because, when I get up in the morning or anytime I'm about to make a transaction, I have to know where we are in a cycle, and not only where we are in the market from a cycle perspective, but where I am within the stocks perspective, because every tradable instrument that I know in a very fractal setting, meaning in multiple different time frames, goes through this pattern over and over and over again. And this is from a book I'm reading by a guy named Brad Kodeshwar. I'm probably doing a bad job with his name, but it really makes sense. We want to be successful speculators, which he doesn't use it as a bad word. Speculator is a good word. We want to interpret, not predict. So we want to be able to interpret what the market's doing and not guess what it's going to do. And then we want to take trades and different moves based upon what the market is doing and how we interpret it. So I always want to interpret where we are. And clearly, as we ended the year, it looked like we were on our way down. The question is, did today reverse that? And in the next few minutes, I'm going to try and address some of those that question. Yeah, there's no such thing as a free lunch. This is what we're selling. All right, and it's obviously a low-key approach. We have a meeting, George and I, coming up actually a month from now, February 7th through 9th. Not that you need to know this, but in Palm Beach, where the meeting will be, Palm Beach Gardens, I sat outside for dinner tonight. It was 80 today and sunny. I think we probably got the best place in the country right now. The meeting is a Saturday, Sunday, or Monday. Again, here's my email address, hgsidoc@gmail.com. And we'll take good care of you. Breakfast and lunch each of the 3 days, cocktail reception with hors d'oeuvres and free drinks Saturday night, dinner at my condo on Sunday. And all attendees will get screen videos. And Joel will be there taking a 4K video or high-def video, which we'll share as well. It's $800. It's got about 4 or 5 spots open. And again, I had a lot of questions about the topics, and it's topics that we do, heck, I do on a daily basis. It's how do I maximize the tools I already own. You know, maybe we'll get George Roberts there. Maybe we'll get Chris White there. I think Chris will be there. Maybe Chris will give some discounts for people who are there. But it's really about how to use the things you already have and how to duplicate what we're doing among different tools. Both George and I like to talk about what we've learned from the various masters out there. I'm a top-down guy, so I'm going to look at market, sectors, and leading stocks. And we'll go very detailed about what we do from a pre-market prep. How do we find stocks? I mean, you know, I don't do what I do on Sunday night and put up for everybody every night of the week. There's not enough time, but I have about a 20 or 30-minute routine that I do, and I'll show people how I do that. And we'll do it both at the end of the day, Sunday, getting ready for Monday, and then before the market opens Monday, we'll look at pre-market volume, gappers, and other things that might give us an idea of where we might want to go. Something that I learned from Alexander Elder, he calls it his A-trade. And Elder's A-trade is he's got a specific setup he looks for. He talks to us, teaches us how he finds it and how he manages it. And that's one of the things that I did in June, and I've asked George to do with me, to talk about his favorite trades instead of you know, my favorite trades. They'll be different. And then how to manage your trades, size, stops, money match, live trading. This meeting is clearly different than the meeting in Palos Verdes, and if anything, I would say, all right, Palm Springs was also 80. I'm not surprised, and you're drier. I would consider this complementary to PV, and let's face it, PV is on the West Coast, and as much as I love going there, and I'll be there again in March and October as much as I can, there are some people on the East Coast that haven't made it out there. So hope to see you there. I'll ask George in a few minutes when I turn it over to him to talk a little bit about, this is a seasonality chart on Netflix, and it's from Magenta, and he'll talk a little bit, I hope, about the Netflix seasonality trade. Netflix, let me back up. Seasonality to me does not trump technicals. It does not necessarily trump the market, what it's doing. But if I was to tell you that if you bet on black and the number 7, and it's been right 10 out of the last 11 times when you were in Vegas, you would probably put a lot of money on black and 7 because 10 out of 11 times is a pretty good record. Well, 10 out of 11 times or 9 out of 10 times with the first quarter earnings estimate, Netflix goes up, and it goes up an average of 20%. And I think seasonality can be an interesting thing to add. I'm seeing somebody is having sound issues. Can people just type in yes if they can hear me again, or why? Okay, good. All right, so whoever typed it in, that's good enough. Everybody else has got a Y, so I know it's not on my side. This is my screenshot from Genesis Trade Navigator. And it's a busy screenshot, and I don't really want to take the whole day and tell you what I'm looking at. But I'm a top-down guy. As I said before, I like to look at that pattern of what the market is in. And I like to get some confluence among different markets. These are 3 different time frames, 60, daily, and weekly. These are the E-minis. These are the NQs. This is the IWMs because the RUT is too expensive. This is the NYA, and this is the YM. So I've got the S&Ps, the NASDAQ 100s, the Russell, the NYSE, and the Dow futures. These are some things called these are person, to me they're buy and sell signals, the momentum indicators. They're also in Thinkorswim. And what I saw on the 31st, which caused me to go in correction mode, and actually was great because I bought a bunch of OEX puts and I bought some contra ETFs, was that we had all the major indices within a bar. The S&P on the daily and the weekly went to a sell. The NASDAQ the day before had gone to a daily. That day had gone to a weekly sell. Same thing with the Russell. And so when I saw all these indicators, that told me what the market was doing, and that caused me to change my behavior. Those are the types of things that I like to do as a top-down investor and to drive me so I hopefully make the right decisions. Now, I guess I should show you that on the same chart, bring it back up here, hold on one second, and then let me click it here. We had nice green bars here today, but you notice there's no buy signal popped in. So I think based upon this indicator set, and I'm going to go into a couple of other things, I'm going to see if I believe what we saw today was a reversal in the correction and time to go long, or is it something that we still need to be careful of? And I'm going to try and interpret and not predict, as I showed you in that saying. This picture is from Genesis Trade Navigator, and it looks at, on each of these indexes, the different time frames. You can obviously change them. It looks at advanced decline lines and their moving averages for the index alone. It looks at on-balance volume, and then these trading signals are from John Person. And if you have questions about that or about Trade Navigator, feel free to email me, and I'd be happy to show you. There's sort of not, he doesn't really tell everybody what's in them, but there are certain things that I think make a lot of sense that he does, and some of them are pretty easy, I think, to do without having to go out and buy Genesis. So one of the first questions that I have for myself is, was today a reversal day, and is it okay for me to jump back into the market on the long side? So I find HGSI and EdgeRater to be extremely complementary of each other. And I hate when that little thing happens. All right, there we go. I opened up something I didn't want to open up. Perfect. Close that up. All right. We're good. And so I opened this up way too many times. So one of the downsides of my having to do programs like this is when I, come on, reboot my computer in a different resolution, things end up on other screens, and of course I never have. All right, there we go. Pull this back. All right, it's back. You open up my warehouse view, And then let me resize it for the screen when it opens up. All right. Now, I use HGSI. I'm obviously a homer for HGSI, but only because I love the program and it works for me. And there are probably ways that you can duplicate much of this with websites. I think this is a much easier way of doing it. The first thing that I do, and we'll get back to the boxes in a second, is I go down to the Woodward and Brown user groups, which are supplied by Ron Brown. And if you've been on my weekend calls, you know that I look at the top down, because this is a pure technical ranking system. The only thing that matters is price and volume. It's most heavily weighted on Friday and a little bit of a weighting towards yesterday, or towards Monday, or 1 day back, 5 days back. I'm thinking my weekend updates, and then a little bit for 3 weeks because it has the force 13-day. So the first thing I notice is that gold and silver are up at the top, and Treasury bonds. So this can't be a great time over that period of time for stocks, or you wouldn't see these defensive things up here. Commodities have been in the toilet for some time. Transports are down, and most of the major indices are at the lower third of the list, and this is ranking them for what's working now. Although I notice that small stocks are higher. So very quickly that tells me that the market still has some pressure in it, at least over the time frame I mentioned. Gold and silver have turned around because they've been down. I'll look at 1 day price change, and obviously the NASDAQ lead today was up 1.3%, Russell up 1.3%, mid-caps were up. So it was a great day to be long this market, but it's been in the setting of a correction. And then I'll look at the S&P 500, and you'll have to bear with me as I size my chart when it comes up. Nope, it's sized automatically. Look at that. All right, give me the S&P 500. So the first thing I do is I look down here. And this is what I call now my webinar view. It basically is sort of a kitchen sink of the indicators I use. And the last live meeting I did, I went step by step building this view. And it's on YouTube, and it's on the HGS site, or you email me, I'll send you the link. But I'm looking down here where these green and reds are, where it says Eurekas and Phoenixes. We have something called a Eureka, which was created by our master, Ian Woodward. And the Eureka is sort of our equivalent of the follow-through indicator for HGSI. And, the follow-through indicator in O'Neill world is about, a 1% move on higher volume that occurs within so many days after a bounce in the market, after the market's pulled back, something like that. And I noticed that in October when we had the pullback, we had a couple of Eurekas. And what I see here in December, when we pulled back and turned around, we had a Eureka. We did not have a Eureka today. So to me, that's somewhat meaningful. That puts me in a much better day for the longs, but not necessarily are we out of the woods. And now I'm just going to click into a simple view here and just look at moving averages, which is what I like to look at. And what I see is, if I give myself a little bit more time, obviously an uptrend, pretty steep pullback here, looks a lot like it did here, and here, and here, and here. And, you want to be going short up here and long here and so on and so forth, not always so easy to do. And so the question has to be, is this it? And do we want to load the boat long? I did cover my shorts at the end of the day yesterday because it looked like we recovered some, yesterday being Tuesday. And thank goodness, because today was an up day. But is this it? I don't have a Eureka here, and that bothers me. But when I do look back, certainly going back all of 2014, we would get these 5-8% pullbacks a little bit longer in October, and then we would have the green bar, and we would have the bounce. So I'm in bounce mode, but I'm not ready to commit all my funds. So I'm still interpreting, and I think to say we're out of the woods, I'm not ready to say we're out of the woods. Then I would be predicting, not interpreting. I had a question about the Eurekas. Let me just go back to them. One of the things that you'll learn in the Ian's course, and I'll discuss a little bit as well, and I think is that there are different settings for Eurekas, and the deeper, and it's the same thing for the Kahunas, which are down here, we're not talking about right now. The deeper the color, the more extreme the signal. So there's a higher level of evidence that you need to get the darker color. So the deep dark green is much more powerful perhaps than the lighter green. And those are the Eurekas. And again, I did a webinar within the last month where I built the charts one indicator at a time and spoke about each indicator. So then I'm going to quickly look at the others to see if they all look similar. Is there a story here that I'm missing? I'll look at the Dow Jones. One thing, I had these lines drawn from one of my weekend webinars and talked about the top. And you can get an idea, that I actually drew the line before the market rolled over, and that was my signal, another signal to get out. Same pattern on the Dow, obviously a nice bounce today. I look at the volume, and it's about average volume. It's not excessive on the Dow. So a big volume day might have made me feel better. If I look at the NASDAQ, again, a little bit above average volume, but less volume than we saw yesterday on the down day. A gap up today, a much more different looking bar. It's a much more narrow bar. But, I guess that's a bullish around me, but, it's still an inside the bar day, and I think there's still more to learn about whether this market has turned. I feel much better than I did over here, and based upon these last couple of rallies, I believe that we're going up from here, but that's predicting. I want to interpret, and so predicting is kind of a hypothesis. The Russell 2000, again, this here was a triple top on one of my Sunday calls, and I was kind of excited because my hope was breaking through the triple top, maybe we'd have gone on to new highs in the Russell 2000, and it came down extremely, I'm sorry about the sound, it came down extremely fast. I'm on a phone, not the internet, so I'm just going to keep plugging through. But as you can see, a similar day. So all the indexes look about the same. I like to look at the VIX, and one would expect that the VIX came down today. And it did over here. I like to draw when I talk. I've got to find a program that allows me to draw on my screen while I'm doing my PowerPoints and my presentations. But you could see what I was talking about here was a rising VIX is tough on the longs. A falling VIX is a great time to be long. We spent a lot of time here down on the bottom of the VIX, in which case it's pretty good trading as well. Well, we went through a period of rising VIX, which obviously for those that are long was painful. Today we fell back. The other big thing that is, I think, dominating the world we live in, this is the dollar. And the dollar is powerful right now. And right now I'm going back, and this is September of 2012. All right, and you could see how much I have to take in of data. We are now broke through the peaks of July 2010. So, when you look at a UUP as a measurement of the dollar and see that it's run from 21 to 24, 25, I don't think that gives you the full in-your-face feel of what the dollar's really done. The dollar has taken out 5 years, 4.5 years high on the dollar. Now, why does that matter to us who might be traders, investors, speculators? Well, it matters in many ways. If you are a lover of gold and silver, Well, it was up for a couple of days because of volatility, fear about Greece, the world exploding again. But how would you like to be long gold from the top and never sold? All right. Yeah, we had an exciting week this week where gold looks like it's recovered some. This is a weekly chart. This was a support line at 115 that I drew in many weeks ago, and it's, you know, we got back above that line. So maybe that is a sign that gold's going to go up. I'm a believer in gold. One day gold's going to go up. Had a lot of fits and starts and fallbacks, but what's interesting is it did break so far and hold above this 50-day moving average. Well, a strong dollar is not great for the metals. If you look at silver, you see a similar pattern. And if you look at oil, you know what you're going to see here. Although oil, I think, had a little bit of a bounce today. Kind of looks not like a big bounce, but, I mean, you know, this is the USO. And it's hard to believe back in the days of yore in 2008, the USO was 120. But the USO has been in a free fall, broke through the 200-day moving average in August, and it's, you know, basically fallen in half, as you know. And then the other impact of a strong dollar is, boy, you won't want to be in commodities. It looks a lot like oil, but commodities have been in a horrible bear market. Okay, great. And, you know, part of doing this live is so people can ask, or in this case, type questions, and we can answer them. The question is this stuff in HGSI, and where do you find it? So when you load HGSI, I've got a lot of windows going on now. And so let me just see what I can close down. I'm going to close down my Trade Navigator. I'm sure I have a memory. What else can I close down? I'm going to close down my Skype. All right. When you first load HGSI, it's very important that you go to Designer. And I got to see what screen my Designer, oh, here it is. And you should see this no matter who you are, how many times you've used it, you should have this basic structure. The reference groups are all there for you. You don't do anything there. All of ours are the same. The SMART groups are groups from a number of folks, pre-planned scans that are updated every night for you. You should all be the same there unless you haven't imported them. And at one point you had to import them. Now most of these come automatically with the download. The same thing with the user groups. Most of these are my own, but this Woodward and Brown user group, you should have it. If you don't see all the SMART groups and you don't see Woodward and Brown, all you got to do is go into Help. See, here's Tools. Where's the website? I got to get my, here it is. If you go in on the main panel under Help, go to where it says Add-ons and click on that. That'll bring up the HGSI website, right to the Add-ons page, and all the different files that I'm using can be found in here. And after my meeting, I'll give George a new update to put up here. So the Woodward and Brown user groups, you should have them already, but it's under Ian Woodward and Ron Brown, and all you do is got to click on it, download it, and double-click, and it will automatically install. Now, I have created some of my own views, but within the program, you just open up one of the indexes. Okay. Up view is there's a few definitions of view. It's one of the most powerful controls that you have in HGSI. In the charting module, you'll notice a similar structure as you do under the designer, and I've got to get rid of some of these old ones. Here's my name, and I may have made some changes, but all of you should have access to these, and these are in here already, most of the things that I use. Now, I have a lot of test things in here, and I changed some things, and this is a new view down here, which just cleaned up the nuclear scan view. But so the answer is yes, everything that I'm showing are under the hood. You just need to know where to find it. And if you see a date after it or anything here, these are things that you could download from those add-ons. And like I said, I promised to give George a new add-on after my meeting so that everybody has exactly what I'm doing. All right, so I've started by looking at the market, so I'm not yet convinced. All right, I'll just tell you, I'm hopeful that we've had a bounce. I'm glad I got rid of my very short positions in my index puts, but I'm not totally convinced that we're done yet. So the next thing I might want to do is go into EdgeRater. And in EdgeRater, which is another software program, it's a program that very tightly integrates with HGSI, I have some favorites. One of my favorites is to look at the Hindenburg-Omen. This wasn't created by Ian, but it was certainly popularized by Ian. And I commented on the board on Monday that the Hindenburg-Omen fired and that was a sign of caution. And basically, the Hindenburg-Omen is a signal that occurs when the professionals are getting out and the people like us, the little guys, are getting into the market. So it's lots of volume, new highs and new lows are both up. It's a period of volatility, and you could see on the 5th, the Hindenburg-Omen fired. And to fire, you need a new high and new lows of the stocks in the NYSE to be above 2.2%. The moving average, and I think we have confusion, frankly, with Chris and I, of which moving average has to be rising. I think it's the weekly, not the daily. I'm not sure which Chris is using. The Napoleon oscillator has to be less than 0, and your new highs cannot be more than twice your new lows. And you could see we now have almost a 3-to-1 ratio, and the omen is off. So that's a good thing. Then I want to look at my buckets. My buckets, and I do this every weekend, I identified buckets. I'm going to go over here and find the S&P 1500. I'm going to hit run. The buckets are, imagine your Bollinger Bands. And if you think about Bollinger Bands, you know that stocks spend 90% of their life within their Bollinger Bands. And when they're above their Bollinger Bands, there's a high likelihood they're going to come back into them. And when they're below them, there's a high likelihood they're going to go back up into the bands. So if you could take the entire market, and for this I'm going to talk the market is the S&P 1500, and you could identify within the S&P 1500 how many stocks are above the midline of the Bollinger Bands or below, that might be meaningful. 2/3 of the stocks are below the middle of the Bollinger Bands. Why is that important? Because in an uptrend, stocks make higher highs and higher lows, and they typically go from the top of the Bollinger Band down to the midline, to the top of the Bollinger Band, down to the midline. And in a downtrend, they make lower lows and lower highs, so they go down to the Bollinger Band, up to the midline, back to the Bollinger Band, and so on and so forth. So the fact that 2/3 are below is perhaps bothersome. It is to me. And then I look at slices. Every 10% within the range of the Bollinger Bands, what percentage of stocks are there, and do we have a lot of stocks above and a lot of stocks below the bands? And last night when I looked at this, I knew that we had a bounce today. We knew I had a bounce because I had 13% of the stocks in the S&P 1500 were below the lower Bollinger Bands. And I've done research, and I showed it at my meeting in June. This is a signal that within 2 days the market's going to bounce. Ian has refined this, and I'm not going to give away his secrets. He can keep them for his March meeting. And he, I think, has found the real trigger day, that this might be pulling the bow, and his trigger might be when the arrow goes or the market turnaround. I also would be looking sometimes to see a pattern like this. Whoops. Here's a market where we had 16% of the stocks above the Bollinger Band. So those are some of the things that I use to get an understanding of what way the market is going. So this is still bearish. Some of the pressure to bounce is off. So again, I don't see a resounding this market is going to get better. And then I go into what's called the market report, market summary. And this is really a great piece of work that was done by Chris that took over many years of Ian's work. And I love Ian, and I've made a lot of money because of Ian. And I don't have time tonight to really explain this to you, except to say that here's the vertical here are major market indices. And the first one looks at were there any kahunas, percent change and percent B. And you could see on the 5th, when I knew we had a couple of days of problems, we had a lot of kahunas to the downside. This is percent B, where you are within the bandwidth. And there were times like where my little box thing here is, where almost all the indices were at 100% on the Bollinger Bands, meaning they're all the way at the top. There are times when they're all above. There are times when they're all, here's a point in time when they were all below the lower band. Well, you know the market's going to bounce, and we had the kahunas. So, but what Ian really came up with, which is a signal, which was his percent B times the bandwidth, and he calls it the Woody indicator. And it's yellow. So to me, it's still caution. And the red is gone, but it's still caution. So I'm going to tell you off the bat, I'm still cautious about this market, and I've got my finger on the sell button, and I'm going to be watching very carefully. Now, George may be a lot more bullish than I am, and it won't take much for me to get bullish. Frankly, all it's going to take is a Eureka tomorrow on a big day and a lot of volume, maybe a gap up in the morning, really strong futures. But I'm going to wait, and I'm going to see that. The other thing that I do every night with an HGSI that I find very useful is to go into the warehouse view again and go down to 07 under, this is again Woodward and Brown's Major Markets Plus under his user groups. Go down to 07, which is industry groups. So you can go start with 06. And I want to rank the index groups by what's working right now. And I will use the 2-day force as my what's now indicator. And it told me that over the last 2 days, and obviously heavy today, his 5-day returns, the only one of these that's up over 5 days is healthcare. His 1-day return. Healthcare, consumer discretionary staples, utilities, technologies, and financials are the sectors that today were strong. If I look at 2-day down, none of the sectors were weak enough to fire. Well, this was a pretty strong day. And then I go down to the 7, which is industry, and get an idea of which industry groups are working. And first 2-day up. So of the 177 or so industry groups, and despite the massively positive day today, this is it for the groups that have positive force on the 2-day. On the downside, nothing. So it was a pretty big move. Now, one of my concerns about using this as a ranking tool, maybe it's too fast. And maybe I need to look at 4 or 5 days. And so George created within the program a 5-day force. Everybody has it, but you have to know where to find it, and then you have to use it. So if I look at over 5 days, there's only 28 industry groups that are actually showing any strength over 5 days. And I think that might be important than just one day wonder. On the 5-day down, this is why the pain in the market, 63 groups per week. So those that are long-term users who are going, where did he find that? I can hear you, see you mouthing that. There's a filter that you have to make your own filter, and I don't have time to do that today to show you. But what I want to show you is, and I can give this to George, that would make it easier. There's now a technical indicator and force index 5-day EMA. So it's already in there. A 5-day force is in the program. The views, the filters allow you to use it. Close down. I just have way too many things open. So let's go back to that 2-day force and just take a quick look at what's working, because, you know, I'm going to play the market I have in the morning, not the market I guessed we'd have based upon tonight. So let's see what's working. Restaurants. Now, if I highlight any of these groups and I right-click on them, change to index group, I list the members of the group that met the criteria. And these were something that I did see over the weekend that showed some strength. And I like to look at all of them above the index. Now, the bad news is this is an end-of-day analysis. And then I have to say, oops, and say, not any longer. Because everything that I'm doing now, end of day, we now have a new button called Intraday. If you enable Intraday here, and you go to the update button and enable it here and run an update during the day, with 15 minutes away data, you're going to update this into almost real time of what's happening. So you could run this at 11 o'clock, and if you have a fast computer, good, future's taken off, I'm glad I got rid of my shorts. If you have a fast computer, you come back in 10 minutes, 5 minutes if you have a really fast one, and you can look at the analysis. So when we started this, I didn't look at the futures. I just got a note that futures are taking off. I love it because, as I said, I closed my shorts. I'm just nervous. And nothing would make me happier than to see 100 points on the Dow again. I made a lot of money today on the long side. Good. Excellent. So it is like the last one. So I could look at any of these, like Sonic Group, just by now left-clicking on it. And the only reason it's slow here is because I got 18 windows open. And I'm getting a call from another company to buy something. What a shocker. Anything I get from Utah is always an investment company. And so these are the indicators that I look at. And again, I don't want to steal too much of George's time, and I want to turn it over to him in just within 5 minutes. But I might go through these, and what I see here were kahunas. So that's a % B move, dark blue of 0.4. That's a huge move on the chart. A pocket pivot, PSAR supportive, a Bible gap up. I can see that on the chart. A mobile breakout from the squeeze, a Bible gap up here, and my technicals are green. And I could go through the charts one after another. Oh, there's one I like. This one I like. This is my A-trade chart. Anybody did my webinar this weekend? My A-trade chart was VIPS. It looked just like this, and it's taken off this week. I want stocks in an uptrend, pull back to the 50-day moving average, and take off on momentum. So I had a kahuna. That's my momentum here. A kahuna in a squeeze on a stock that pulled back that makes money. These are what, and I will flip through charts looking for patterns like that on an end of day, and now with the intraday module, I'll do that during the day as well. Another new add-on, and thank you to George. I didn't want to flip through this to get the 3 pieces of information I cared about. He put them here right for me. Industry group, sector, industry, PE, 50-day average volume, and earnings due date. Those are what I care about. In the market we're in, I care about yield as well, and I've been told in the next release I'm going to have yield here. They're very responsive at HGSI. You ask for something and you eventually get it. I won't tell you what else I asked for because I had some big asks. So I would go through everything in the group. In the essence of time, I'm not going to do it tonight. Then I'm going to go back into here, and I'm going to right-click back, and then I'll highlight the next group down, which is department stores. I'll right-click, change index group, JCPenney's. I'm not buying JCPenney's. I might have wanted to short it today. I thought about shorting it today, but I figured everybody else in the world would short it too. So it had a big gap up today on a Kahuna and a mobile breakout. It must have had some good same-store sales or something. But the beauty of this program is, and again, I'm not here to sell HGSI. I'm here to show you how to use HGSI if you have it, and you can probably duplicate this with websites, is I've listed out here which groups are leading, and then all I do is I look at a couple more home builders. You right-click on it, change to index group, and you see which ones are leading. Well, I didn't buy the leading one. I bought into Lennar, and Lennar had a great day today. But, you know, one thing that's interesting that I've learned from Person, here's my uptrend, pull back to the 50 and up on momentum. This is what I look for. I can clean it up for those that think there's too much there, and I agree. There's a lot there, and there's my uptrend, pull back to support. Look at the volume today. John Person, I've spent enough time with him, say he would look at this and say, look, Jeff, they're up all about 5%. The big money's buying home builders today. There's a reason why the entire sector went up, is the big money started loading up home builders. Whatever reason, maybe George can talk about seasonality of home builders if there's a reason for it coming into the market. I'm sure the low interest rates don't hurt. And my personal favorite is biotech. And I think I probably post too much about biotech, but I know a lot about this. This is the world I'm in. And how do you find some of these small guys that take off? You find them by scanning, as I did, getting the ones that are leading in this. I'll take a look at that one question that just got a second. I found the ones that are leading, and I go and I look at them, and you could find some nice winners here. And I could spend 3 hours going through each one, but then George will never talk and he'll be mad at me. One question was how the overlap, will I find these all in EdgeRater? I personally think you need both programs. And the reason why you need both is the way you update this, you know, you have native connectivity to HGSI as your data provider. And it makes everything so much easier. A lot of the stuff that we do in HGSI has been ported here. For example, I have a trading universe of $2, 150,000 shares. I'm a big fan of Gil Morales, so there's a code blue in EdgeRater, and then I'll show you the advantage of doing this in HGSI. So I can run this, and some of their favorite stocks, they're running through about 3,328 stocks, are going to pop up here in a second. And there's a lot of stocks here, but I could use this to try and find some of the stocks that are working. Ambarella is one of the ones I like a lot right now, and I suspect George probably bought some of this stock, knowing George, but pull back to support, big volume, all these things are blue here. These are the type of stocks I want. Now within HGSI, I have an additional thing that I could do that I don't think I can do in EdgeRater. Maybe I'm wrong, maybe I can do both. Here's my Lennar. If I go back into HGSI and I go into my warehouse view, so the first thing is in HGSI, this is being done automatically for you, and I didn't need to hit that view. That was unnecessary. You just take this off here. I don't want any filters. And I go up to, shut that. I have smart groups that are creating for me that list the code blue stocks, and it says combo driven. So these are being driven both by the stock signals as well as by the group. So did the FIG, or whatever that one was, didn't make it up here. Let me go back into the Edge Rater and see if it popped up there. So there's an additional, it all depends if it made it to, well, I don't have, it'll take me too long to find it here. I'm sure it's just, I'm just trying to answer a specific question that somebody asked about whether it would have shown in here. What was the signal? It was, it's probably sitting right in front of my face. I can't remember the symbol, so I'm just going to go forward. So the advantage, intertwine, I like the fact in HGSI that it brings the group rotation in with it. So let me talk about the view, and then George, I'm going to put you on in just a second. The view is a combination of two things. It is a combination of a filter and of a module that ranks things from top to bottom. So a filter limits what I have, and the combo rank ranks it from top to bottom. I live with derivations of 3 to 5 views. Scorecard combo, and to figure out what these are, you go here, edit current view, it tells you what it does. So the scorecard combo, and I have it without a filter, locates top stocks to trade based on both technical and fundamental factors. They have to have strong earnings and revenue growth over the past year, strong relative strength, group rank, accumulation, so on and so forth. So I use the scorecard combo on most of my ranking modules because it takes into account the fundamentals. And then I use various combinations with that. For example, I want to find stocks in an uptrend that are close to their 50-day moving average that had momentum. All right, Kahuna and Force are two momentum indicators. I only buy things that are above $2 and 150,000 shares. I want them above the 200-day moving average. They're in an uptrend. And in Ian speak, free parking is the 50-day moving average. There you go. These are the stocks that met those criteria. Some nights they all suck, and some nights I want to buy every one of them. So just very quickly, let's see if they met my criteria. Uptrend, pull back to the 50. Let me go back to my fancy chart and say it better have a Kahuna. Uptrend, pull back, met my criteria, I don't love it. China Mobile, too flat. Better ADS, too flat. I want something that's in a real uptrend. All right, this is from 40 up to 58. That's a real uptrend. Pull back to the 50 or below and had momentum today. That might go on a watch list. So what I've done is I've used the program to try and search and scan and find stocks that meet my favorite criteria. So that's the scorecard view, and then derivations. My top-down view is pure technicals. I use the top-down view when I want to look at the impact of price and volume over, heavily weighted today, a little bit less weighted 5 days ago, and then a little bit less weighted 3 weeks ago. So it's heavily weighted on today's performance, taking into account price and volume. And then I use the force as my ultimate ranker because it looks at what happened today and yesterday. The other ones that I use, and again, they'll be in the update that I give George, is I created for George Lee what I call volume buzz. And I'm looking for stocks that had some huge volume. And the reason for this is on a lot of these little dinky biotechs, for example, and I'm doing this blind, you'll see a stock that's had a big move. I didn't prep this, so I don't know this is going to work on this stock. And you wonder, how could I have found it a couple of days ago? Now, this isn't one of them. But it's usually, for me, it's a volume move. And I get, this has been in a downtrend, I get all kinds of great information by finding stocks that have volume 3 and 5 times normal before the stock moves, because like that is the opposite of distribution. That is accumulation of a stock when you get little price movement up and lots of volume. And I love to find stocks before they break out. So those are some of the things that I do at HGSI. Those are my thoughts of the market. I suspect that now the futures are out, I'll be a little bit more favorably biased. But again, I want to see my Eureka. I want to see lots of leading stocks break out. And there's a lot of things I'd like to see before I go all in. But I like those futures. I won't lie to you. All right, George, hopefully you're ready. I'm going to make you the presenter now. So by way of introduction, before I switch it over, George Lee is somebody who I met a couple years ago. I was in the audience. I'd heard him. He used to speak for Best Choice and other programs. Neat guy, smart guy. I wanted to stay close to him to learn. And then I found that I was going out to dinner with Chris Katcher and Gil Morales. And I asked George if he wanted to come, and we've been buddies ever since. So that was the best dinner I ever went to. So I am going to unmute George, and I'm going to make him the presenter. And I'm going to turn it over to you, George. You there?
Okay. Yeah, I'm here. Okay. Can everybody hear me okay? I'm going to show my screen. Okay, so I was anticipating I'd be back home in Kamloops, and so I'm just working on my MacBook Pro at the moment, and I've had some issues with the sound the last few days when I've been doing some presentations. So if things don't work out too well, there's an explanation for that. Okay, so before I get started, maybe I'll give a little bit about my background. I've been doing some workshops now since about 2008, and as Jeff said, I started out working with the seasonality software, and I'm still working with a seasonality company, Magenta Trading Software, and it's a seasonality software. And again, as Jeff says, I think the main reason that both he and I do some of these workshops is because we've both been pretty successful in our trading, and we're trying to help other people out to learn how to be successful as well. Okay, so I do get frustrated at times because I do give people a lot of sort of leads on things that they can get into, and then they don't follow through on them, and so that's my frustration is that you will probably get some good tips if you come to our workshop, and then hopefully you will follow through, and if you do follow through, then you should be able to pay for the workshop many times over, both with the information you get and with the setups that are given you at the workshop at the time. Okay, so the first time I went to a workshop was actually very close to Jeff. It was in Florida as well, and the workshop I talked about the market, and I asked people in the room whether they had a positive bias or a negative bias on the market. So this was in March of 2008, and at the time I just bought some puts on Bear Stearns, and I paid $1.40 for, I think it was the 75 puts, and a friend of mine had also bought some puts on Bear Stearns as well, and he paid $3 for the 80 puts. Anyway, my puts, I wound up selling them at 10 times what I paid for them. I think I paid $1.40 and sold them for $14, and he bought his for $3 and sold them for like $5.50 or something. So I think he was ecstatic that he made money on them. And I was pretty upset afterwards because those same puts went from $1.40 down to $70. So Bear Stearns, is probably many of you remember, went from a $150 stock to an $80 stock to a $5 stock in a very short period of times. And the puts that I had bought went down to next to, well, the stock went to next to nothing, and the puts went up to $70. So that would have been approximately a 50 bagger, which I haven't done too many of, but I have done quite a few 10 baggers. So I'm just going to go into talk a little bit about my approach to the market. I basically trade two main types of trades. I trade breakouts from low volatility, so I'm looking for situations where you get volume and you get a volume buzz and some of the things that Jeff talked about. And I also trade continuation plays. So if something's in an uptrend and then it pulls back and then continues on, I do those kind of trades. And if something's in a downtrend and it pulls back and then continues on, I do those kind of trades. So for example, recently the oil has been going down. It's pulled back to a resistance level and then it's continued down on its merry way. And this gives you lots of opportunities to go short on these sort of things. So I just wanted to give my sort of impression on what the market is doing right now, and to do that I'm just going to go into a chart of the SPY, which I think I've prepared here, so hopefully I can get it up. I do have some other charts prepared here, but I just wanted to show you just my take on what's happened in the market today, which is basically we have a trend line here. So we drop from the bottom here to the low here and come up through here. We broke through this trend line yesterday and the day before. And what have we done today? We've just come back to that trend line. So until we come up above this trend line, my bias is still towards the downside. Okay, so we're below a trend line, we're below the 10 EMA. This light blue line here, the cyan line is the 10 EMA. This magenta line here is the 50-day moving average. There should be a red line in here too. That's the 20-day moving average, and we've got the 200-day. Okay, so Jim mentioned a bit about his influences. So again, I'm a William O'Neill follower, and I've followed some of O'Neill's disciples as well. So I've followed Chris Kacher and Gil Morales. I've also followed Dan Sanger. So all of these people, I think, have a very good long-term approach to investing. And I think I'm a sort of more of a hybrid type of investor. I do like to do longer-term investing, but I usually will only stay in the thing as long as I think the market is conducive to it. So I know Jeff likes to stay in his positions for a longer period of time. So what he does is he stays in his positions and buys protection against it. I'm not that forgiving of stocks. If they start to go down, I get out. So that's probably the difference between Jeff and my approach. When things start to roll over, I get out. When they start to roll over for Jeff, I think he buys protection on them. I'm going to show you some of the recent setups and trades that I recommended this past weekend, just so you can get some sort of sense of what I do. But you can see my impression of the market. Again, Jeff has a top-down approach, and I usually have a top-down approach as well. I like to see what's going on in the market and just look at it in terms of trend lines, moving averages, and just to see where the price action is going. Okay, so what would change my mind here? Okay, so we had a high here. We have a high here. I think this is the lowest high. If we got a bar that broke out above this, then I would be thinking that the market was likely to reverse and I could get a low risk entry. But again, you never know for sure, but just looking for opportunities. So before I say anything else or show you any charts, I'm going to tell you what my bias is in trading and the thing that I try and say over and over again. So if you come to the workshop in Florida, I will emphasize this to the utmost. The main reason that people lose money is because they have no comprehension of risk reward that they're taking when they enter a trade. Okay, so trading is risky, and you must understand what the risk is. You can define what your risk is whenever you take a trade, but what you can't do is you can't have a really good idea of what your reward is going to be. If we were like that, then we wouldn't take any bad trades ever. And I have recommended some things that didn't work out, but I've also recommended a lot of good trades before they happened, and they've continued on to have some pretty good moves. Okay, so I've been working with Chris White the last little while, and he'll be in Florida. And I don't think it's uncertain. I think he's definitely coming. And I've got two templates that I've worked with Chris on. One is just what I was talking about. It's breakouts from low volatility. So the way I define that is by using what's called a squeeze. And then the other thing that Chris has been working on recently, and he's just released, is his candlestick template. And in his candlestick template, he'll talk about different types of bars. So I'm going to demonstrate some of those in some of the slides I'm going to show you, or some of the screens I'm going to show you. Okay, so see if I can get this out of the way here. So this is just from the slides that I sent out this past weekend, and this was the energy bear. Okay, and of course, as you all know, energy has been going down, and the oil sector has been going down for quite a significant amount of time. And Jeff just showed you that. So this was the setup that we saw on Sunday night from Friday's close. Okay, so this candle here represents your lowest high, and again, I'm not going to go into a much deeper explanation than that, but just to say that this is a clearing bar, and this is one of the typical type clearing bar setups that I look for over and over again, and I basically told people what I was looking for. So it was at the 10 EMA, it was a red candle, and again, these red candles are usually better than a green candle. And the reason for that is green candles tend to get pulled back. Red candles already pulled back, so if you get a move up, it's going to be even stronger. Okay, so I just talked about putting in a buy stop here above there. Okay, and then if it did get up to this level, that we were going to buy it. Okay, so again, what did ERY do this week? I'll see if I can find it here. Sorry, normally I'd have this on my monitor, but I can't get it out of the way here. Okay, so this was another stock that I talked about for the Canadian people. So I also do some workshops or online things on a regular basis, and I got into this stock. It's called Pilot Gold. People that are in charge of it are pretty good session. Anyway, we got in at 85 cents, and currently you can see it closed at $1. It was actually $1.04 earlier in the day, but it's gone up over 15% from where we got in, and I wanted to show you ERY if I can. And again, I apologize for the computer, but it's the best I could do considering I'm still, oh no, don't do that. Don't do that. Oh yeah. Anyway, here's where ERY was on Sunday, and then you can see what it's done the last few days, okay? So it has to move from about this area here up to over $24. So it had about a 10% move up in the last 2 days. So that was fairly good. So again, I was in ERY. I put in the buy stop where I told people to put it in, and I had an ad at that PSAR as well. So there's the chart from Sunday night, and you can see what it subsequently did. We also talked about bonds, so I'm just going to find you the bond chart. So I talked about TLT. So there was TLT. So again, I usually like to have some sort of interaction. Usually I'd ask you what you think TLT did over the last few days. But again, at the webinar I did on this weekend, I asked people what they thought TLT was going to do. Now, there had been some bearish divergences in the market, but TLT had no bearish divergences, and I thought it was more likely to go up than to go down, so I'll just show you a chart of TLT as well. And you can see it came from this level here up above here. And again, if you'd bought some calls on this, they went from 128 up to 131. So something like your 128 calls more than doubled over this period of time. So again, there's ways that you can double your money very quickly if you're paying attention, if you look at these setups. Okay, so that was another one that I talked about. Okay, and then I'm just going to find my other one. Okay, so I did a review of the year, and then I just gave people a list of things that I thought they should watch. Okay, Netflix actually wound up being a very good short. Okay, but Google, as I said, was a short in January. I'm going to show you the charts of those in just a second, how well the calls have done. Tech also, I said, want to watch for it. ESI and DeVry usually start becoming longer a little later in the month. The agricultural stocks, okay, and then I said to watch these, okay, and of course, JNUG and NUGT had two really good days on Monday and Tuesday. SCO and DWTI both went down on Monday and Tuesday. RUSS was the one I was looking at. So the first ones were the ones that I was more interested in. RUSS had a good day Monday and Tuesday. So Russia has been a country that's been underperforming. And again, I could go into more detail the way Jeff does, just showing you how I look at these countries and how I know these are things that you should watch. And then if the market's going down, typically we want to watch VXX, and we can look at calls on VXX, or if we just want to play a ETF, then we could have played UVXY. And then the other one that was moving was DGAZ. Okay, so anyway, I'm just going to show you charts of the Google calls and just show you what they did. Okay, so again, I sent off that alert. Let's see if I can find this. So first of all, this is the Google 520 puts, and this is from Monday. So that was January the 5th. Okay, and this would have been your entry here. You would have gotten in somewhere around 289, 290. Your stop would have been somewhere around 260. So as soon as I enter a position, I know what my risk is. So I'm risking approximately 30 cents here. By the time it's made its move, I trailed stops up as this went up. You can see where the stops are. Okay, so I kept moving the stops up. You can see this is a modified Fibonacci grid that I've created here. I call it a profit loss grid. It's something that a fellow named Tyler Bullhorn taught to me, and on his website, stockscores.com, you have the opportunity to create these kind of charts. Anyway, you can't do it for options, and I want to be able to do it on Thinkorswim for options as well as being able to do it for stocks. So this is an option chart, and just shows you how we could have traded using the methodology. So again, I don't have time to go in the full methodology, but you can see where the stops were at the initial. You're in at a stop at 260 when you enter at 290. Okay, we move our stop up to here, keep moving our stops up, keep moving our stops up, and then finally we get stopped up out here. So we got in somewhere around 290. We get stopped out somewhere around 555. Okay, so that's not quite a double, but again, if you've got a 290 option and it goes up to 550, you've made $3.50. Sorry, you've made close to $2.50 on that day. Okay, and again, if you've got 10 contracts, that's a fairly nice day for you. Okay, and then the day after that, let's see if we can find them again. Here's the Google 515 puts. This was on yesterday, so for Tuesday. Again, here's your entry on the 515s. Okay, so we had a pullback, and then it took off from here. This was the open of the day. So there's your opening. It's around 340. Your stop's at 275. So right off the bat, you know you have about 65 cents of risk. And each of these increments here, you can see that you're getting 6 times what you risk, 7 times what you risk, 8 times what you risk, 10 times what you risk. Okay, so anytime that you get 3 times what you risk, I think you've got a system that's going to do pretty well for you. But in this case, I've made 11 times what I've risked by the time we get stopped out up here. So again, I'm not going to go into any detail here about stops and stop losses, but Jeff promised me he's going to talk about chandelier stops at the workshop, and I'm definitely going to talk about just a risk-reward grid like this. And I think it's very important that you can create grids like this and that you understand what your risk is whenever you make a trade. Okay, so I'm just using this as a way of illustrating what we'll be doing at the workshop, and again, we just don't have time to go into sufficient detail to go into all the things that you may want to be interested in. Okay, so looks like everything's okay. Okay, and then I could just look at some of these charts as well, but again, don't have enough time. Okay, so the other thing that we looked at was just a seasonal chart. So this is a big seasonality, and you can see big lots has these moves in January typically. So I actually bought some big lots, and it did okay today. So it's one of the stocks, and I bought some options on it yesterday that for $1.70, and today I think they closed around $2.65. Anyway, Derek's the fellow that's created Magenta Software, and this is a chart from Thinkorswim. But he was the one that talked about big, and again, typically after they get bottoms between January 9th and February 2nd, they have an average gain of about 25% over a 2 to 3 month period. So again, if you can capitalize on that, you can make a little bit of money on them. Okay, what else have we got? Okay, so if I come back to the chart here, these were the things that I told people to watch, and this is the watch list created from them. So this just shows you how the returns on the things that I suggested people watch did. So you can see DWTI was up 17%, UVXY was up 14%, ERY, which I showed you the chart on, was up 12%. The VIX itself was up almost 12%. SCO, another short on oil, was up just about 11%. There's RUSS, it was up 8.9%. Okay, so again, you know, when you get these kind of moves off of things that somebody's given you some information on, hopefully you can make some money off of it. That was on Monday. I want to show you the list from Tuesday. So here's the list from Tuesday, and again, at the top of the list, we have JNUG was up 16%, 16.5%. Nugget was up almost 16%. DWTI was up almost 11%. SCO was up again. SOXS was up. So again, all of these things were having pretty good moves, and this was at the end of the day on yesterday. So again, you know, if you have this kind of information, I'm hoping that you would be paying attention and you'd be able to capitalize on it.
Hey, George, some people asked if you could expand your screen.
Can I expand?
I've watched your screen, so I'm glad that means they could see it. I just can't see where your screen went to.
Okay, that's about as much expansion as I can do. I have on my other computer, I have the ability, but that's about as much of an expansion as I can do. Okay, so I don't know if that's some help, but this was from Monday.
The answer was much better, much better.
Much better? Okay, great. Yeah, I can't see the comments, so I'm sorry about that. Anyway, there's the list of things that I was looking at, and again, not every one of them I was expecting moves on, but I was certainly expecting move on the energy ones and the gold ones. And then the other ones are just ones that have good seasonality coming up. Okay, and I don't have big on that list, but I probably should have put big on that list because that was one that, that list was the one that I gave to the Web 99s. And last night I was doing a presentation with my Kamloops group, and I talked about big. So, okay, so hopefully you can see. So that's the kind of information I usually help people with, and if you think that's going to help you, then I hope that we'll see you in Florida. Also just did a review of 2014. Okay, what else have I got here? I think I have just some seasonal charts. Okay, so again, this is the Netflix move that typically happens in January, so I don't know again, you can see that typically there's an up move that happens in January. There's this up move. So again, this move here is a move for the last 5 years. I've made money on it. It'll be before the meeting that's happening. And so because it's happening before the meeting, you just should be aware of the fact that Netflix the last 5 years has gone up over 15% on its earnings. And the earnings for Netflix are coming up on the 20th of January. Okay, and then the other stock that we looked at Google. And again, you can see Google's had a pretty good move, consistently down. So it goes down, down in January. So it typically has this move in January down. So I think 1 year it actually went up, but majority of times it typically goes down in early January. So it's just something we were watching for a seasonal down move. The other ones that we looked at were ESI, which goes up. But let's just look at big again. I showed you the chart. Okay, so you can see this is the chart on Thinkorswim. It just shows you how big typically goes up this time of year, and you can see what it did today. So I actually got in here yesterday, so if I come into a shorter time period, okay, so I had a buy stop in here for buying some options, and I think I got filled because I didn't even know I'd gotten filled, but I got filled at $1.70. And if I come into Thinkorswim here, just see where they closed today. I think they're around 265. So I bought the February 40s. So here's the 40s. They were 275 to 310. So I got in at 170. So they're up $1 from where I bought them. Okay. So anyway, it's not like these are mysteries or anything like that. They're things that we've talked about over and over again. And the thing that frustrates me the most is providing this kind of information to people. Again, I'm retired. I don't do this for a living. I don't recommend. For me, the softwares that I use, they're tools. I think HGSI is a great tool. I really like EdgeRater. I like some of the things that Chris has done, and I've worked with Chris to create some of the templates that he's done. I've been at the HGSI meetings, and I think they're tremendous meetings. There's a lot of interchange between, and I think if anybody comes to Florida, I think you'll be getting a HGSI approach to investing, which I think the long-term approach to investing is a lot sounder than just trying to become a day trader. So again, I'm hoping to see a lot of you in Florida, or some of you in Florida, and I'm really looking forward to coming there. And thanks to Jeff for having us, and thanks to Mr. Robertson for creating the program, the HGSI program. So does anybody have any questions, Jeff? Are you getting any?
I've been answering those that came through. They want you to have a service for picks.
Well, I do. It's called Web 99. And
right. So Magenta Trader, somebody asked what the scanning program was to find the Netflix trade and other trades that we find. And there are a number of seasonality programs, magentatrader.com, bestchoicesoftware.com, Trade Miner from Gecko Software. Thinkorswim has some functionality. I think that I like Magenta, but I've used all of them. And Magenta just came out with a really cool calendar function that automates some of the process for you. That's how I find them. You know, somebody asked about George's take on HGSI. George has a problem. I'm joking when I say the word problem. George is a Mac guy. HGSI is a PC guy. I even gave George a PC, so he's forced to learn HGSI. And I know he loves EdgeRater, which I think is just a PC program. I'm still working on teaching George HGSI. George, any other comments on HGSI?
No, I think it gives you a really good summary of what's happening in the markets. One of the things I'm always interested in is what sectors are leading, and I think HGSI's got a fabulous top-down type of approach that you use just for finding different sectors, and I'm sure you'll spend some time at the workshop talking about that. And the other thing I think is really important is just I go to a lot of workshops, and one of the things that always floors me is that somebody can speak for 3 days and never talk about risk management or stop loss control or anything like that. So if you've been to a workshop and nobody talked about those concepts, I think you'll be pleasantly surprised if you come to our workshop, because I know Jeff's going to talk a little bit about the chandelier stops, and I'm certainly going to talk about risk management, what my criteria are for getting in, what my risk reward criteria are before I'll take a trade, and that sort of thing. So hopefully you'll find that of benefit, and if it's not a benefit, it's usually because people aren't paying attention, I think, more than anything. And as I said, that's probably the most frustrating thing is I do this, and I think Jeff does a lot of things he does more to try and help people out, because I think both of us have done very well trading, and I just feel I'd like to try and help people out, and I think Jeff's the same way.
Yeah, and I agree with that. I mean, most people don't know my history, and I don't need to talk about my history, but I love to trade. I love the tools. I'm a big fan of HGSI, and I've been doing HGSI webinars for years. And I do it just because I think it's a great tool, but you need a little help to know how to maximize it. I like to help people. Some of their questions that came out, what is Web 99? MagentaTrader.com is where you get Magenta Trader from. And one of the smart things that the proprietor, Derek Pilger, did is he put together a group of great speakers. George is one of them. I think he charges $99 a month. And George does 2 or 3 talks, and there's others that do talks, different trading techniques. That's what Web 99 is. They want to know how long you've been retired. First? No.
I don't really think I really want to be totally retired, but I'm not prepared to do the kind of I work when I want to more than because I have to, and I really enjoy traveling, so I'll probably see a lot of things when I'm in Florida that people that live in Florida have never seen. So I know when I come to Florida, I'll be going to places that Jeff's never seen, and he spends a lot of his time there.
Well, maybe you'll take me so I could feel like I've been on some tour.
Feel like you're a resident instead of it's the tourist approach.
They want to know if you're going to be at the PV meeting this year in March.
Palos Verdes. I'm planning on the Palos Verdes. We're doing the workshop in Orange County the week before, I believe.
Yep.
So I'm hoping to be in Orange County the week before Palos Verdes, and then Palos Verdes, and if they want me to speak at Palos Verdes, I'd be happy to put something in. And we've got some new things on Edge Raider on candlesticks, and I'm sure people will find that very interesting. So Chris and I could do something on candlesticks and just some of the candlestick things I've been using recently.
Well, that's great. I think we've got most of the questions that have come through. I appreciate you being on tonight, George. I just wanted to put this slide back up in case anybody has any questions. Just a couple of other comments to make. The price is, it's lower than some other meetings, higher than other meetings. I tried to find balance. I don't do it to make money. That's not how I make my income. Other people do, so that gets reflected in pricing. The meeting I did in June was at a much fancier hotel. And the problem is, in February in Florida on the beach, we'd have to pay $400 a night for a room, so I decided that would kill attendance. So the hotel choice is actually quite good, but you can stay wherever you want to stay. It'll be George and I, Chris White from Edge Raider, and most likely John Person will stop by as well. I have to formally invite him, but the nice thing, John and I become buddies, and so, you know, I spoke at his meetings, he'll come speak at mine. And it'll be a great meeting. We'll make you fat. And those that stick around on Tuesday, I'll take on a nice little tour of the Intercoastal, show you Tiger Woods' boat, Tiger Woods' house, Tiger Woods' girlfriend's, ex-wife's boyfriend's boat, or I'm not sure she's him anymore, which parks next to Tiger and is bigger than Tiger's boat, which is actually quite funny. But we'll have a lot of fun. We had a lot of fun in June. So thanks, everybody, for joining us tonight. Just to remind everybody, I do a weekend webinar, at least it will continue for some time, I'm sure. And I try and explain the things that we looked at today. I go into more detail. If you go to the website, if you haven't seen any of them, there's multiple places to find them. I post them on the website because a lot of people, well, I was asked to. And the website, I'm sure, you know, for people that don't remember, is www.highgrowthstock.com. There's no cost to anything that I post up there. And if you go under investing strategies, you can see some great stuff from Ron and Ian, as well as my blog, which is really my videos. The other thing about HGSI that's very exciting, without you investing a penny, by the way, is not just the HGSI blog, which we have a lot of updates here, but there is a community and a forum. So I guess the community forum here, which is the Yahoo groups, it's been so long since I signed up. There's a Yahoo groups forum, which is outstanding, and there's a lot of smart people that post to it. If you're not familiar with HGSI, as I said, this wasn't supposed to be a sales presentation, but there is a free 30-day trial. It doesn't even take a credit card. EdgeRater, for interest there, it's edgerater.com. And I believe Chris also has a free trial as well.
He does.
Yeah. EdgeRater.com. And you know, I think you saw how we use it. Big data for the little guy. 30-day free trial. And then I don't know if Magenta has a free trial or not, but that's MAGENTA trader.com. And then, you basically has got some neat things on the website, but he has a number of free webinars that he does that teaches you about seasonality. And then the other thing is, I mentioned John Person several times. I think he's been additive in what I do and has got some great signals that are the most popular used signals in Thinkorswim, which, by the way, are free. And in fact, those charts that I put together on Genesis, you can get pretty close to what I did within Thinkorswim for free. And so you can find out all about it here on the website. And like I said, his indicators are in Thinkorswim at no cost. So on that note, let me see, I got some more questions. Do either of you prefer TOS or TradeStation? I'm a TradeStation first, TOS second, and I'm pretty convinced that George would say he's a TOS, he's a Thinkorswim guy. Is that fair, George?
That's totally fair, yeah.
Yep. And the reason why I like TradeStation is because I've got a huge investment in some indicators that I use for scanning real time in the market. And there's some limitations to how many symbols I could scan at a time, not scan, but monitor and market watch in Thinkorswim versus TradeStation. I could have 1,000 symbols and 50 different setups that I'm looking for, and they fire up one at a time when they hit. All the stuff we'll talk about at the meeting. Again, thanks everybody for sticking around. We had a great turnout. Hope you all have a great night. Wanted to point out some of the things that we like. Thanks again to George Lee and to George Roberts for giving us the technology. And good night, everybody.